We've all been there. We have an open covered call position and the stock is absolutely soaring, right? We maybe try to roll our positions, we try to buy to close our position, and nothing makes sense. Well, in today's video, I'm going to give you guys a masterclass that I use when I'm deciding on what to do with a covered call that's very deep in the money. Yo, what is going on, Premium Chasers? I hope you are having a God blessed day. Today, every single person that comments down below is going to get our rolling playbook. So just drop a comment down below and I'll personally send it over to you. And while you're down there, do me a big favor. If I provide any value to you in today's video, make sure to hit that like button and that subscribe button. It really helps me out and I appreciate it. It pats the ego a bit. But guys, all jokes aside, today is a difficult conversation to have because, I talk a lot about with individuals that have a covered call on a stock and then the stock, of course, shoots up drastically, right? They're not able to really manage it much anymore. And they just are stuck. They feel stuck and they don't know what to do. And that's what I want to talk to you guys about today. Really how to manage a really deep in the money covered call position. Like, what are the options? Well, number one, right, let's just show you guys a live example of one that I'm in right now, right? So SOFI, at the time of me recording this, is on a tear, blew past $19, right? Just crazy. But we could see that I have a $17 covered call on this, right? I have a $17 covered call. And to kind of bring you guys up to speed here on my $5,000 portfolio, we could see on the 25th, I ran a covered call on SOFI for the 16.5s, right? I collected some juicy premium. And then at that point, of course, SOFI starts to just absolutely tear it up. So I rolled my position. Guys, don't let anybody confuse about what rolling is. Please, it is not complicated. If you've been selling options for like a year, you've most likely rolled a position. You've just been doing it manually, okay? Literally all rolling is buying to close your current position, right? Giving some of that premium back or even more premium back. You're closing your position out, right? And then you're selling to open another position on a different expiration date or a different strike price. You've all done it, especially if you've been doing covered calls for any period of time, right? So there is like an art to it, I guess, but you've done it. It's not confusing when people say rolling, okay? So you can see I actually bought to close this at $43. I bought to close at $43. You're like, Pete, what? You got to only $33 in play. You basically gave back almost $10 to close this thing out. Yes, I did because I saw that SOFI was running. Obviously the earnings are at the end of the month and I'm hopeful, right? So I rolled them out to the $17 covered call position. I collected a little bit of premium, right? And netted about under $5 of premium on that. However, my appreciation profit went up a little bit higher at $100 for a total net of 114 or a 7.11% return, which to me, for my risk tolerance of what I'm trying to go for, exceeds all my expectations for a trade. Okay, I'm a very logical individual. I am not going for moonshots. I'm not a full-time trader. I treat selling options as a business, locking in gains, making money, making premium, and moving on to the different opportunities that are out there in the market that are always out there. Okay, don't let anybody get you to FOMO into some weird stuff. That's why you guys will see I don't often do like leveraged ETF and stuff like that. So what is my situation now? Like, what do I do now? Well, we could see here, I have my $17 call. SOFI is trading at what, $19.26, another 3.7%. Just insane. Love to see it, but it is what it is. There will be other opportunities out there, and there will be an inevitable pullback. I believe that. Listen, I always believe there's always an inevitable pullback. There just is. And you know what? I challenge you, right? I challenge a lot of people. Have the same enthusiasm you have on SOFI when it comes down. Even when it comes, down like 5-10%, have that same conviction that you have on a company, maybe not even SOFI, on another company that's blowing up. Have that same conviction because you didn't have it in April when Nvidia dipped under $100, right? But now everybody's back on the hype. Like, listen, human psychology it's comical, right? The second you get good at it, you can do incredible things, especially in the stock market. Because if you can get your emotions in check, especially in the markets, you have an edge. That's the edge. that's the edge, right? Because you could start seeing these patterns of individuals, right? And you can really see this on the fear and greed index as we jump between extreme fear and extreme greed. And if you know how to play this to your advantage, right, you could do some damage. You could do some damage. So I always try to be emotionally in control. And I know SoFi running up the way it has right now, it might continue to run, but it will eventually have a pullback, and I'm going to be waiting. But you listen, I'm not going to be just FOMOing in like literally all the dumb monies and retail investors are doing. But let's get back on the topic of today's video. So what are my options here? Well, obviously I can buy to close my position, but it's not something I necessarily want to do, right? If I go over here to roll this thing out, right, you could see it automatically does. It does a buy to close, right? Quantity of run, one, my SOFI call, right? And then I can sell to open immediately another one. Now, this is where I get to select my expirations, right? So obviously, right, there's SOFI earnings are on the 29th, so that is going to be big. Pay attention to that. Now, here's where it kind of gets iffy, and you have to really just make a decision for yourself, right? Because even if I go out, let's say go out to August 1st, right, which is a little under a month away. If I even go like 19s and I just go, just the midpoint, even here, I have to pay $67, right? Even if I go down, let's say even if I go down to 1750s, right? I am barely right here, I would actually collect just about $19 of credit to push this out another month to the 1750s. Now, is this a trade I would necessarily do? I don't know. I don't necessarily know yet, because I have to, first of all, see, right, what the math looks like, right? So I keep everything very simple in my covered call and cash secure put calculators. They are all free inside of our Facebook group, so make sure you join us here, right? So I will literally type in here what that entire trade looks like and to see if it makes sense. When you are doing a roll like this, you're not really premium chasing in a sense at this point anymore. At this point, you're just hoping, right, that you can get a better a better strike price to capture more of that appreciation sale, right? So in this case, it would essentially be like $50 more of upside for me, right? With a credit of 18. And that sounds fine. That sounds fantastic, right? I'm getting another $18, right? I am able to capture more upside. I'm getting more premium. However, I am locking up a lot more of that of my capital, essentially, of my collateral, more time. I'm now pushing this out just about a month, right? Which is pretty drastic. Let's take a look at even like the 18s. If there's at the 18s, that's where I'm kind of capping. Now we can even go out further. Let's go exactly about a month out from the time of me recording this, and I can see. Let's see my net amount here, my midpoint, right? My 1750s. I'm still doing a debit right here as well, which is, absolutely insane. So August 1st, obviously, would be, like in this specific case, at the time of re-recording this, would probably be the absolute best play that I could do here, because I would actually at least get a credit. So let's see what my credit again would be. See, it's actually dropped a bit now, just live here, right? So for me, I don't think it's something that I would personally do. What I like to look at the market is like, okay, what was my original plan? Well, my original plan was to run the weekly SOFI wheel, right? And taking assignment, rolling out following week if I can. But eventually, I actually do want to sell my shares. I genuinely do. I want to sell my shares because I'm able to capture, right, my appreciation sale and move on to a different opportunity. Most of you fear that. You fear that assignment. You fear like taxes. You fear those kind of things, which of course, 100%, those are all very important things to be paying attention to. But let's not all forget, right? When everybody's riding high and we're seeing in that extreme greed, that is honestly, like, I don't know if I'm just very contrarian in this regard. If you are at all, let me know. Like, I just feel like when everything's in extreme greed, I'm scared. Like, I'm the most fearful. I do pre-market calls every single morning at 9, and like I'm scared to do things besides a covered calls when everything's in extreme greed, because I've seen this happen so many times where we can flip back so fast, right? So fast, right? So it does make me nervous when we're in extreme greed and when we're in extreme fear. Of course, I'm nervous, but that's where I'm able to deploy a lot of that dry powder into cash secured puts, or just buying shares outright and then running covered calls when we're in that greed and extreme greed. So I know this is kind of a bit of a long-winded video, guys, but at the end of the day, it's okay to sell your shares. It's okay to like let them just get called away, reset your plan, right? For me, when I'm looking at my, my positions and what I'm doing, I have my buy and holds, which I do recommend most of your money being like a buy and hold Vanguard fund stuff and, high yield savings accounts, T-bills, that kind of stuff. But for me, when I'm selling options, I like to treat this like a business. I don't treat this as anything else, right? Once I hit my target, I'm fine walking away and sitting them off my hands for the rest of the month. But a lot of people, they don't want to do that, right? You want to just keep chasing and chasing and chasing. Yeah, listen, baby, we the premium chaser. But at one point or another, when you hit your target, like don't overtrade. Overtrade leads to losses. I haven't really seen it in other ways. And especially when you're selling options, you're already kind of set up to win, in my opinion, in this situation, right? So take your wins. I mean, I'm not going to complain about selling my SoFi shares at $17, even if it's trading at 25. I'm not going to be upset about it, right? I'm not, because guess what? I still made a profitable trade and I'm happy with it. It just as easily could have gone the other way. If you want to learn more about the Option Seller School, guys, we have a private invite-only community of non-toxic individuals, all financially stable people that do this day in and day out, Monday through Friday. Click the first link in the description of today's video. You're going to learn more about what the ARC option strategy entails, how it actually can fit into a real life, right? Like I have 3 kids and business, work, things that I want to do on a daily basis. I'm not sitting here in front of this damn computer all day. And if you are somebody that wants to do that, power to you. But, I'm not the guy here for you. But if you want to learn a strategy that doesn't eat away at your life, but lets you kind of be involved in the markets, click that first link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.